Today we're exploring why Eurozone bond yields are rising, particularly beyond Germany, and what this might mean for the wider European economy and the euro itself. Over the past week, we've seen significant increases in government bond yields in Italy, Spain, and France. Initially, markets had focused heavily on German bond yields, but now this upward trend is clearly spreading across the region. So what's driving this? First, new spending announcements and ambitious stimulus plans have led to expectations of increased bond issuance across Europe. Germany itself is proposing large-scale infrastructure and defence spending exceeding €500 billion. The European Commission has also announced an €800 billion Rearm Europe initiative. Simply put, more government spending means more bond issuance, and higher supply typically pushes bond yields upwards. Secondly, improved economic growth expectations are nudging real yields higher. Inflation forecasts remain stable around the European Central Bank's 2% target, but markets now anticipate stronger growth in the medium term due to increased investment and potential regulatory easing. This has significant implications for the foreign exchange markets as well. Rising bond yields generally attract global investors seeking higher returns, potentially strengthening the euro. However, if yields rise too quickly, it could also signal heightened risk perception, potentially limiting euro appreciation or even putting downward pressure on the currency. It's also important to note that demand from institutional investors, such as pension funds and insurers, remains strong, helping to moderate the rise in yields and support confidence in the currency. So what can history teach us here? If we look back at the Eurozone debt crisis about a decade ago, rapidly rising yields indicated serious investor concern over government borrowing and debt sustainability. Back then, countries like Greece, Italy, Spain, and Portugal faced intense scrutiny as their borrowing costs soared, creating significant economic and political challenges and significantly weakening the euro. Today's situation is different, but it does serve as a useful reminder. Whilst current yield increases reflect optimism rather than crisis, the balance between government spending, borrowing costs, and investor confidence remains crucial. If bond yields are rising across the Eurozone due to increased government spending plans and improving growth expectations, this could strengthen the euro in the short term, provided yields remain stable. Though we're not in crisis territory, the past debt crisis reminds us that sustained confidence in government finances and economic stability remains essential. For more videos like this, please like and subscribe below.